Okay, so we're going to start with funding, and this is a nice way to determine who's in control and potentially who's offsides. But before we get into how we're going to do that, let's do a brief refresher of funding. Now, we touched on it briefly in the BitMEX interface overview, but let's just make sure that we remember what it is and what it's comprised of, and then ultimately how is it going to help us to determine who's in control. So what is funding? Well, it's the cost to borrow an asset to go long or short on margin. Funding is the mechanism by which exchanges attract liquidity to their platform. This is incentivizing one party to be the liquidity provider. And we know that when we're on the derivatives exchanges, taking long or short positions, there's a cost associated with that. So margin funding interest is paid to the funding provider in the same currency provided. So we know that on BitMEX, and we've been looking at the XBT USD perpetual swap product, the currency in this case is XBT or Bitcoin. And once we know these two things, we can start to understand the intervals around funding. So what I mean by intervals, how often it is paid. So there's set time periods that exchanges have to where longs are paying shorts or shorts are paying longs. And funding has payment intervals which are dependent on the exchange. So just as I mentioned, BitMEX has it every 8 hours, so there would be 3 in a daily funding period. Other exchanges may differ. Now, knowing that it's the cost to borrow an asset to go long or short, and it's a cost associated with margin trading on these derivatives exchanges, if there is a large discrepancy, let's say that longs are paying significantly to be long or shorts are paying significantly to pay shorts to be short a position, well, the extremes in positive and negative funding can help with gauging sentiment in the market. So what do we mean by this? Well, we talk about sentiment analysis, and we have our tool set of technical analysis, and now we're going to be applying sentiment analysis. So funding is one variable or one component that's going to allow us to add this on to our analysis. And I want to show you what I mean by this when there's extremes in positive and negative funding. So before we get into that, let's just understand how it's calculated. And funding is made up of two parts. Now, it's an interest rate, which is stagnant, right? So it's not a variable rate. And then we have the premium and discount. Now, the way you should think about the premium and discount is, if you remember when we were going over the BitMEX interface, we were looking at the perp swap price, and we were also looking at the index price. Now, the index price we know is a composite of spot exchanges with different weightings that's giving us an index price. The perpetual swap price is that particular financial instrument. So we want to look at the perpetual swap price in relation to the index price to determine who is potentially offsides, right? This is getting back to determining who's in control, who's offsides. We're looking for these inflection points, these exhaustion points in the market by one party that could flip. And so shorts paying longs occurs when the funding rate is negative or at a discount. So a discount, if we look back at this statement, would be the perpetual swap trading below the index price, right? That's telling us that shorts or sellers are maybe getting a little too aggressive. Now, when longs pay shorts, that's when the funding rate is positive and it's a premium. So again, we look at our perpetual swap price and then we look at the index price. If the perpetual swap is trading above it, Well, that's a premium. It's to the point where you're getting those big discounts and big premiums where you're going to start to see how this is going to help. And I'm going to show you right here. So this is funding history, and this is a look back in time. We can see based on the dates here and the times, and we can see our XBT USD, the symbol. So we know that we're looking at the perpetual swap for Bitcoin. And we can see the interval. Remember, I was talking about how often this is paid out. So every 8 hours, we can see here, and we see a funding rate, and then it's going to give us a funding rate by the day, our daily funding rate, which is essentially this times 3. And if you look at the numbers, you can see how that matches up. And this is great, and it's a bunch of data, but I want to key in on some of the sustained negative funding rates. And we can see here that these daily rates are very high, and we can see that here too. So I want you to start to think about this as a potential shift in control, right? So clearly, the shorts are paying handsomely to be in that short position. Now, it gets to a point where, is that sustainable? Maybe not. And instances such as this can create short squeezes. And we'll look at the flip side with the premium and longs, but start to think about how you can look at a chart and maybe we're at support here and we have a sustained negative funding rate. Maybe sellers are getting too aggressive. And so if we look at a sustained positive funding rate, again, we have our same time, we have our XBT USD symbol, this is our perp swap, we know we're looking at that every 8 hours, daily funding rate. We could see here that longs were paying significantly to be long. And this is the potential for a possible long squeeze, right? You'd be removing market participants by price dropping and liquidating longs or forcing them to close their positions. And start to think about your technical analysis and say, maybe if this was at a resistance level in a supply zone and we started to see this, that could give us our edge to figure out maybe we are determining who is in control and who's off sides. And I want to show you that in these 2 slides. So just as we spoke about, what's this effect on price? Well, let's just look at our little storyboard here. You can see price comes down, comes back up, makes a higher high off of here, but then starts to dip. Comes back up, makes a lower high, and then we have a large impulse down through our support right here. Now, this would likely be characterized as high volume. I don't have that turned on, but I want to focus on the impulse down and this consolidation period. And then I want to look at this indicator down here. Now, this was a big sell-off, and we can see that we have a long lower wick, a wick down here, and a wick here. And it's all making higher lows. But we're in a range-bound consolidation market. Now, what this is showing us down here is the predicted funding rate. So we can see that funding on a predicted level went very negative. Now, if we start to piece together this little puzzle, okay, we just had a big impulse down, sellers push price down, they're having a tough time pushing it down more. The sustained negative funding is showing up and we're in a range-bound market, and we know that range-bound consolidation areas can lead to either expansion or breakout, contraction or breakdown. Well, when you see the shorts paying heavily to be in a short position at a range low support, and I know for a fact on a high time frame this was a key level, you get instances that can cause a very violent snapback and a short squeeze. And that's what we saw right here. And this sentiment analysis, this little piece of data, combined with our market structure, understanding that we had a large impulse down, we're in a ranging market making slightly higher lows. Start to think about how you could have maybe anticipated that the shorts or sellers were offsides and that there was going to be a shift in control to potential buyers or long positions. Now, if we look at the flip side, well, let's take a look at this chart. Now you can see we have a very nice move up, exhibiting bullish market structure as we're making higher lows and higher highs. Maybe getting to an exhaustion point here, and we have a big impulse down. And it often takes time for buyers or longs to accept the fact maybe that the trend is reversing or things are changing. So you'll have these drops and you'll have these eager buyers step in, right? We're buying the dip here, and that's fine. But us who understand liquidity theory and the importance of who's offsides in determining control, we could say that maybe the longs were a bit over their skis here, and we could see that that pulled back, and they're still eager to buy in. And this is a positive funding rate. This is a sustained positive funding rate where longs are paying shorts heavily to be long. Well, maybe this is getting to an exhaustion point. As we can see, maybe that was just a bit too high for the longs and price comes back down. And we can see that our predicted funding rate starts to come back down, and we can see a little red here, obviously a little snapback, and then we see red come in here, and what happens? Price snaps up. So recognizing these inflection points is a key factor for determining who's in control. And when we're looking at the funding rates, we can start to use this indicator, we can go into the funding history, and we can start to take our storyboard with the technical analysis and then put the pieces of the puzzle together from the sentiment analysis and develop a much higher conviction trade setup. So that was understanding funding intervals. And in the next video, we're going to be going over open interest.